Yeah. One company that is in focus in today's session is Welspun India, and that's on the spectacular set of numbers that have been reported. Clearly, the kind of uptick that we've seen on the margin front, as well as a 24 times uptick in terms of profitability. Let's understand as to which are the segments that have led to this growth, what's the sustainability looking like, and what's working in favor. Joining us on the show is Dipali Goenka. Dipali, good morning and welcome to the show.
Good morning. Thank you so much.
Always a pleasure to speak to you. Dipali, spectacular set of numbers that we've seen from the company. Firstly, I'm sure they've met your internal expectations as well. What has worked this time around?
So I think if I look at my businesses here, yes, one is the core business that has seen a kind of an upside and a growth of around over 15%. And my core businesses have grown tremendously and they've contributed around 31% to my top line as well. So if I look at my flooring, that has grown by 52%, my advanced textile by 15%. So I think if I look at the overarching basket, that has been, been growing here significantly. And I also have to tell you here that, when I look at my core businesses, quarter two always has been a time where there's an upside and a prep, for the retailers for their quarter four festive season as well. So, yeah, it's also because of that we have seen this kind of an upside. And just to also put it in perspective, we definitely are going to maintain our top line commitments that we've given as a 10 to 12% and a bottom line of 15% EBITDA.
Right. So overall, as you mentioned, yes, seasonally, the second quarter is a better quarter as compared to the others, taking into consideration the prep that we see for the fourth quarter. However, taking the gloom and doom that everyone is talking about with regards to the US markets, European markets, how is the situation on ground according to you? Because clearly that is not seen in the kind of numbers we're seeing from a Welspun.
No, let me just give you a perspective. So when I see the United States of America, which actually consumes 34% of the world's consumption of home textiles, that's the largest in the world, we actually have seen resilient retail sales in September. The GDP expanded at around 4%. So we definitely see that there are going to be challenges going forward. And owing to the kind of war as a backdrop and the dynamism that is in the whole political scenario globally, yes, that is where I always say that, we are in a cautious optimism. But yes, this is the time where we see that there has been uptake here. Now, when I talk about UK and Europe, they are definitely low because we have seen that kind of a slow kind of a offtake in UK and Europe. Now, when I talk about GCC as well, you have seen GDP expand, but that's also owing to the non-oil sector. But GCC will become a very interesting consumption part, for home textiles as well. But yeah, overarchingly, the cautious optimism will prevail. United States will have that kind of a headwind going forward as well. So yeah, we always will say that we maintain the cautious optimistic perspective here.
Right. So clearly, we've seen export revenues which have seen a growth of 22%. To what levels do you see it then moderating? Because they would have built in their inventory as much as they want now. How is that looking like?
So if I talk about Welspun, and I'll talk about Welspun here, we definitely are looking at the share of shelf, which we took last year when there was a slowdown. And there's an opportunity for us not just to work at the breadth of business, which is about towel sheets and rugs, but even go deeper and incisive in the terms of the share of shelf, in the terms of private label, in the terms of the licensed brands and our innovative portfolio. So I think that's where we have seen an opportunity and we'll continue to see that opportunity. Flooring is an interesting opportunity for us globally as well, which has actually grown over 80%, in the exports business. Here, the focus will be on the indigenization of the supply chain because, here the China Plus One is an opportunity for us. And of course, simultaneously, we'll see the domestic business also grow and kick in, owing to the festive season that's just right around the corner as well. So yeah, exports is going to be where we will see that offtake happening. But, let's see how that grows. But yes, we have taken on the share of shelf across the globe, across all these segments that we have seen, owing to the kind of the wide basket that we have.
Right. Good that you mentioned about the flooring business as well, because though it's still a smaller portion as compared to textiles, but it's picking up well, because I think, if I'm not mistaken, it's the highest quarterly revenue and margins that we've seen in this quarter as well. So overall, to what extent do you think flooring could start contributing to the overall revenues, because still the concentration is on textiles?
So, see, it is going to be gradually. Let me also just put that. And actually, the base is bigger for the core businesses, right? But it has made a start. And this year, annually, I'm looking at a number of around over 800 crores for our flooring business, in a total, kind of a basket. So yes, it will continue to contribute there. And it will be one interesting segment that we are going to be growing as well, because I feel it holds a huge opportunity for Welspun here. So yes, and it is the emerging businesses will continue to contribute to that, but it is steady and slow. But yes, with the growth that we are going to be seeing here too.
Okay. And from a margin perspective, on a blended basis, yes, there has been a decrease in material costs that we've seen on the raw material front. Is this something which is sustainable?
So we reported a 15.4% EBITDA, and it is a mixed kind of an EBITDA here. While our core businesses reported around 16.6 percent EBITDA compared to the other businesses here. See, it is all owing to your business numbers, the top line, and of course the commodities. And interestingly enough, we'll have to continue to mitigate that risk. And while I look at the cotton, which is 60% of our product, we definitely see the MSP base forming at around 57,500 to 58,000, and that's where it is. So that is the base. And we are looking at the cotton prices to be around 61,000 to 62,000, and it also is owing to the kind of supply and demand. And similarly, when I look at even the freight costs, they are, though looking at the challenges that are prevailing, we are seeing them at a record time low at the moment. But again, it is all owing to what pans out as a situation globally. But yes, at Welspun, we are definitely going to mitigate our risks in that sphere as well.
Okay. And overall, if you have to look at a strategy perspective for the domestic market, how is that panning out? And are you seeing any signs of slowdown, or do you think the consumption story is absolutely intact and much better than what could be expected in the export markets?
So let me tell you, India, I think overarching the consumption story has been a little slow. I mean, the whole consumption in the Q1 and Q2 has been a little slow in the total offtake, which we've seen globally as well, in India as well. But I have to talk about Welspun India and the domestic here. We feel that rural had been slow, but the urban part and the premium segment has done well. So, for example, our Spaces has been the leading brand in the modern trade. Welspun brand, our penetration has been the highest and the highest distributed brand in the country. We are at around 15,500 stores, MBOs that I talk about, which have grown by around 2,250 this quarter. And we will see that continue to grow as the market expands. And we are going to see that happen owing to the retail opening up with the festive season as well. So we are very, very optimistic on the retail and the domestic consumption. And India is the story that is getting all the attention as well.
Right. And another thing, Dipali, is between B2B branded and e-commerce. And if you talk about advanced textiles, within that segment, do you see a shift happening in terms of the revenue contribution mix? Because yes, B2B has gradually improved as well, increased. Though the contribution from branded has gone down, contribution from e-commerce is going down as well. So how are you seeing that mix actually pan out?
If you're talking about India or globally, I mean, I'm just talking about
Globally,
just want to...
across.
So, let me tell you, our core business will continue to grow. It's a mix of, private label and licensed brands. But also, let me also just tell you that our brand portfolio has grown by over, say, 27% here. If I talk about the exports, India has grown, if I say consolidated, around 15%. So, gradually we are growing our B2C segment, and that will actually start growing as well. Now, when I talk about flooring as well, which is branded, which is going to be in Middle East and India, that is also starting to grow. But the base is big. So when I say that 2026, as we grow our numbers, we are definitely having a perspective of around 11% contribution from our brands in India. In a top line. Yeah.
Right. So very lastly, Dipali, clearly, I mean, we've got the flavor of what the market could look like from here on. And seeing the way, raw material prices are panning out, etc. If you have to look at another milestone from here on that Welspun wants to actually achieve, what would that be? Because we know what you're looking at in terms of FY24. But what's going to be the next one? And secondly, is the upcoming festive demand also back, I mean, with a strong one, or do you think it's still slightly muted?
So the next would be our numbers in 2026, which we are looking at around 15,000 crores coming in from entire Welspun Living India, Welspun Living Limited, which is a new name. And it is also because our focus on B2C is increasing. And domestic will be playing around, and domestic itself will be around 1,700 crores out of this basket, including the home textiles and the flooring India Limited as well. So yeah, that's what we are going to be seeing. And I feel that, India has a great opportunity. You know that Diwali is a month later. So you will see that upside coming in now in the month of October. And we've already seen that happening for the past 2 weekends as the business has started seeing that offtake happening. So yes, we are very optimistic about the Indian business. And it is a little slow right now. It started with a slow start. But yes, we definitely feel that growing and seeing the tailwinds as well.
Right, absolutely. And I think for consumption-driven stocks, usually, I mean, at least for you, though you've seen the spike from the export business already show up in the second quarter, the Indian business uptake on the back of the festive season will actually draw down to the third quarter. So probably the third quarter strength somewhere will be maintained as well. Thank you, Dipali, so much for joining us on the show and sharing that perspective and giving us the view. So clearly, 800 crore contribution from the flooring business in the coming year. FY26 as well, a 50,000 number is what we're looking at, as Dipali's been mentioning. And yes, there is that cautious approach, but that will continue with regards to global markets as well, taking the geopolitical concerns. So that's the approach that the company has been taking. So that's the management of Welspun India. And it's interesting to see how the stock has also seen a run up. In fact, from I think little over 70% is the kind of growth that we've seen in terms of Welspun India from the last, on I think YTD basis, if I'm not mistaken, 70% on a YTD basis is the uptick that we've seen on the counter. And the last 3 to 5 sessions have been slightly muted. So probably there is some bit of profit booking that has come in on the back of the uptick on a spectacular set of numbers that have been reported so far. And just to be noted, Welspun India, the other listed name now is Welspun Living. It's just the habit that keeps us saying Welspun India. Staying with the consumption space and moving on to fertilizers. Now, that has been a segment that has been in focus as well. And this is on the back of the updates that we have been picking up yesterday. In fact, the cabinet has approved a subsidy of little over 22,300 crores. And this is lower than what was approved in the Kharif season. Varsha Chandani is here with what's happening in this space and which are the stocks that have been in focus. Varsha, over to you.
Yeah, hi Iril. So as you rightly said, the Union Cabinet on Wednesday approved a rupees 22,000 crore subsidy on phosphorus and potash fertilizers for the current Rabi season, which is down from 51,875 crore allocated the previous 2022. Now, this is due to drop in global rates of the nutrients. So the subsidy will be 47 rupees per kg for nitrogen and rupees 20.82 per kg for phosphorus and 1.89 per kg for sulfur. Now, this subsidy may have adverse impact as the raw material, if you see, has bottomed out and started to increase gradually. So now subsidy has declined, then realization for the end product is constant, and raw material cost is an increasing trend, which will actually affect their gross margins. So company also may suffer inventory losses in the near term. Now, this is according to the Himanshu Binani of Anand Rathi that we spoke to. Now, this is the reason after announcement, if you see, most fertilizer stocks were down. So, to quote a few, so fertilizers and chemicals, Travancore was down 4%, over 4%. Chambal fertilizer was down 3%, and National Fertilizer, if you see, was down 3%. So, and if you see the companies such as Coromandel, who have strong market share in NPK fertilizers, will be able to protect their margins, while the DAP fertilizers such as Chambal will actually face more margin pressure.
Right. Thanks, Varsha, for getting us the details. So these are interesting stocks that one will keep our radar on. And the subsidy on phosphorus fertilizers has been cut by 49%, which is aggressive. And this could have an adverse impact on the margins, as well as Varsha was mentioning. But moving on, let's focus on the FMCG pack as well. Jubilant Food as well as Nestle, both these stocks have been in focus. Let's start with the Nestle Q3 numbers, where it did see a healthy growth in sales on the back of an uptick in demand for chocolates and coffee. My colleague Sesa is standing by with what brokerages make out of it and what is her review. Sesa, good morning. Let's start with the Nestle and then we will jump over to a Jubilant Food. You're
Sure.
on mute, I think, Sesa.
Yeah, I'm so sorry. So analysts, they do see a humongous growth opportunity for Nestle as India's branded packaged food market overall which is estimated at 40 billion US dollars, is growing rapidly, and Nestle is currently just a fraction of the market, despite being the largest food player. Now, Nestle is not only targeting to gain from a shift in the growth of branded F&B market, but the 20 times gap which exists between the branded and the overall food market. So these are some of the factors that will enable the company to grow faster than the previous year. This includes the unprecedented capex program that is roughly about 5,000 crore till 2025, the ongoing distribution expansion, the likely pickup in the new launches as the company steps up its focus on the regionalization strategy. Now, the company is also looking at inorganic growth, which analysts do see positively. Because the company in the last few years did focus on organic growth only. Now, it also appears that the worst may be over on the spiraling cost inflation, even though in the near term there are pressures because a few key inputs such as green coffee remains elevated. Now, on the numbers, the 9 months of 2023 saw near flat volume, while the almost entire 15% sales growth that the company has seen was price-led. But going forward, there is a likelihood of lower price-led growth as product price hikes are largely done. The company will continue to look for relatively lower margin categories in the quest for faster growth. So all this, could inhibit medium-term growth prospects for the company. Now, of the 37 analysts tracking the company, at least 20 recommend a buy rating on the stock, while 12 suggest a hold and 5 suggest sell.
Right. Thanks for getting us the details. In fact, a couple of brokerage notes as well that have come in. So it's going to be interesting to see a Jubilant Food, Nestle as well. Moving on, you have a Jubilant Food that is on our radar as well. The stock is trading with cuts today. Same-store sales growth has contracted on a year-on-year basis. What are brokerages again making out of it, Sesa, and what's the view?
Right. So Jubilant was expected to report a weak quarter, and it did. So, the analysts, they expect the recovery to be slow in terms of margins with no signs of pickup in demand yet. During the quarter, the pizza operator saw a 1.3% drop in the like-for-like sales over the previous year. This is the third consecutive quarter of decline as, the consumers are tightening their belt amid inflation. Now, the uncertainty around the same-store sales growth have led analysts to cut their earnings per share estimates for the pizza operator. The management, however, they said that they expect 5 to 6% like-for-like growth for Domino's in the longer term. Of the 33 analysts tracking the company, 15 maintain a buy rating, 8 recommend a hold, and 10 suggest a sell. This is according to the Bloomberg data. Now, all eyes are on the current quarter and the next. The brokerages, they do feel that the performance is expected to be better, led by the festive season and the ongoing World Cup, and also because of a challenging base ahead, less challenging base ahead rather. Now, coming to the inflation part, bearing milk cost to some extent, other material costs also remain elevated. So margin recovery is also expected to be gradual.
Absolutely. So I think these are crucial points we need to watch out for. Thank you, Sesa. We will come back to you. We're running slightly short of time today, but clearly fertilizers and the consumption space absolutely in focus. Completely out of time. That's all that we have in this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.